Hey guys, welcome back to Invest, where we help you look at the data and become a better quant. So today, uh, it's only about 2 o'clock, but I think I'm just gonna call it for the day and just point out exactly what's happening. The market's been going down pretty aggressively for the past couple of days. Yesterday was a little bit of a reprieve, but Monday, Tuesday were both bad. Today is also bad. You can see here on the heat map we're very red. Couple of places are up, but yeah, mostly red. I think I said it last week. And sorry I have him in on this week. I'll get into why I have him in on so far this week at the end of the video. But for now, uh, yeah, sorry. But last week I mentioned I don't think this is a big one. I think this is just a quick little correction. And I think we will eventually, go back up and hit another top before we end up actually crashing the entire market. And I do think there will be a recession this year. I just don't think this dip right here is the recession. So once it starts to recover a little bit on the other side of this little dip, I would say, buy the dip. I don't see any reason why not to right now, but I would also say, keep in mind that we are, really getting into some choppy territory and that you don't want to be super leveraged in this very moment right now. You see here, obviously, fear is really running the market right now. Yeah. It's really running the market. But usually this, extreme fear, once it gets to that point, that's kind of where you need to consider buying the dip. Like I said, wait till it starts to recover. You don't want to start buying a dip preemptively and then realize, oh, it actually is the beginning of a recession, and then you're just going to lose a bunch of money. So that would be my suggestion on this exact moment right now. One of the things that we are seeing that oh geez, I want to fuck that. I just want the headline anyway. So on Bloomberg, they're saying Americans fell behind on car payments, highest rate in decades. This is a very clear recessionary signal. We are looking at, people falling behind on credit card payments, falling behind on house payments. Last week, we mentioned house payments because that was another news article that came out last week. Now it's car payments. Everything, people are missing payments. People are really struggling. Tariffs are not going to help that. One of the big things that people are mentioning is like the reason the stock market is going down so aggressively right now is because late last week, Trump announced tariffs are going to start on Tuesday. Since then, he's kind of gone back and forth. He's going to keep doing this. And realistically, I mentioned it last week as well, the tariffs aren't so terribly bad that I think they're going to really do much to bring jobs back. Some jobs like, car manufacturers, I saw an article earlier today, the car manufacturers are looking to come back to the United States because one of the things with car manufacturers in particular is they cross the border many, many times. So you're going to be getting charged tariffs every time you re-enter. So it makes more sense to consolidate where you're building that. But the big problem there is that it takes a long time to build up production. Like, it's not something you can just say, oh, we're ramping up tariffs next Tuesday and expect car manufacturers to pack up their entire facilities and move them across the border in a week. Like, you're looking at 100-ton stamping presses to do these body parts. You're looking at all the, infrastructure needed to do that. You also need to change your supply lines. There's a lot of stuff that goes into it that, you can't just expect it to happen at the drop of a hat. And that's really why the tariff situation with Donald Trump doesn't make that much sense. And you have to almost wonder, what is he trying to distract from? Tariffs can work if they're targeted, but the way he's doing it is so aggressive and so nonsensical that you've got to realize it's something like Steve Bannon had said, where you just flood the news with different stuff so that you can keep people on their toes, off their feet, and they don't know what you're going to do next. Now, it's one of those things. So I would say this is probably just temporary dip. Tariffs. These tariffs, the way they are right now, is probably not good, but we'll see where it actually settles when everything happens. TSMC has flirted with moving some facilities back to the United States, which I don't know why this is news now, because they'd already somewhat agreed to doing one in Arizona under Joe Biden. So I don't see why this is just going back into this. Maybe I missed that article where they backed out of that deal. Um, I I think it's okay for them to try and move some facilities back to the United States, but I don't think it's going to make any major plays on there. I guess it makes them more secure because if they have facilities in the United States, then they're not so worried about China invading Taiwan, which makes their future a little bit more secure, so they're not under direct Chinese control. But it's definitely not good for Taiwan if they are, chip manufacturer that's basically keeping them afloat because that's the little golden goose keeping them safe. Decides to make a new production facility in the United States. It kind of is a little bit of a worrying sign. I think for me, I would prefer to see Donald Trump announce more investment into like Intel or some other competitors, like even Texas Instruments, sort of like what the CHIPS Act was doing under Joe Biden. I know Intel had initially said that they were going to build a facility in Columbus, Ohio. I'm from Ohio, so that would have been great for people that I'm familiar with, my family. But that is what it is. Let's see. Yeah, another article here drops nearly 600 points. It's just a pretty bad day overall. We're seeing a lot of volatility. The volatility will die down. And like I said, I do believe that it's going to. I think it's going to recover before it actually hits a harder recession. One of the things with the recession is you typically want to see unemployment be higher than what it is if you're going into a recession. So this would be like a really preemptive move for the recession to precede unemployment. Usually it's the other way around, but unemployment leads the recession. So I think that's kind of all I wanted to cover so far today. So I do want to give a little update on why I wasn't around for the first part of this week. I didn't just run away because the stock market was red and I'm like panicking or anything like that. What I have been doing is I mentioned it before, I'm a software engineer by trade. My whole thing with Invest is that it is an algorithmic trading platform. So I've just been doing a lot of work on that. Over the weekend, I started working on a new project to do some AI development. So basically, I made a tool that will scan your code base and do optimizations to your code, completely automated, and let you review it before you merge it in. So that's kind of what I was doing. I was doing some experiments with that, kind of got tunnel visioned on it and really, really focused on it. I was having a ton of fun. But unfortunately, my home setup is definitely not powerful enough to really get the results that I'm looking for. So I'm in the process of ordering new parts, a new server, just to do the AI development. Right now, my home server is really good for doing the algorithmic trading, but it's not utilizing any video card stuff. So I don't have any GPUs that are really powerful enough to play with AI the way I want to. Even the small-scale experiments that I've done previously have been really, really so small-scale that my server was able to handle it no problem. But now I'm doing something much, much larger scale. So that's why I took a little hiatus. In the future, my goals for this is I hope to make like a AI tool that will help me create videos faster. So, I'm going to do all the voices myself, but I would like to do some of the background videos and stuff like that, all by itself because I'm not a video producer. I'm not super skilled in that. And, this channel is definitely not big enough for me to hire somebody yet. So if we do get growth, I'll end up hiring a real life person. But for the time being, I would like to do something that's a little bit more automated. I did previously pay for a tool, in video AI, but I really found that it wasn't getting the results that I was looking for with it. And, it's one of those things where it does what it purports to do. You enter a prompt, you give it some details on what you want, then you can go back in and edit the videos. It works for some stuff, but for what I was looking for something where I could, upload my own narration and have it create the video for that narration, and it really doesn't do that. it's one of those things where it creates the automated voices, and that's not what I'm really wanting to do, because people want to hear real voices. They want to hear robot voices all the fucking time. So that's what we're working with. Going forward, though, expect a lot of cool stuff from us. We've got our big trading bar. I'm hoping to open that up. The last thing I need to do to open it up is add some captures. I had opened it up previously, but then we really got bots coming in trying to register and trying to do the hacker stuff where they do try to do some SQL injection and all that fun shit. And then they quickly realize, oh yeah, he's pretty immune to SQL injection, so that's not going to work. And their automated tools really carry us that well. So we just need to add that capture in there so that, we don't get too many hackers trying to break our shit. And we want to keep potential future customers safe. But yeah, that's pretty much it. I appreciate you guys watching. Hopefully you stick around, and we have more stuff in the near future for everybody. So, Vince.